Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and of course data. This is where we look beyond just the headlines to get you the insights and knowledge that will help you power smarter decisions. I'm Forkast's editor-in-chief, Angie Lau. Well, when it rains, it pours, and it's pouring Bitcoin ETFs, which appear to be the hottest bet in town. Fidelity, the investment manager with over 11 trillion US dollars of assets under management and 40 million customers, is once again trying for a Bitcoin ETF in the United States. On Tuesday, the block reported Fidelity is close to filing its application for a spot Bitcoin exchange-traded fund, or ETF, with the SEC. Now, Bitcoin prices jumped briefly to $31,000 on the news Tuesday evening in Asia before retreating. Now, Fidelity had filed for another Bitcoin spot ETF in 2021 called Wise Origin Bitcoin Trust and rejected by the United States Securities and Exchange Commission in January of 2022. So why try again just weeks after the SEC called out crypto in its expansive filing, calling it most securities? Well, Fidelity already sells a Bitcoin exchange-traded product in Europe, which is 100% backed by Bitcoin. That's in custody of Fidelity Digital Assets. And now it appears a race is emerging. There has been a spate of Bitcoin ETF applications in the United States from TradFi giants like BlackRock, Invesco, and WisdomTree in just the last 2 weeks. While some experts see this as a sign of rising interest in digital assets, Michael Silverberg of crypto fund Altab Capital says, while ETFs are more convenient for many types of investors, that doesn't make them better. In other words, exposure to crypto doesn't make it crypto. Tuesday also marked the launch of the first leveraged Bitcoin futures exchange traded fund called 2X Bitcoin Strategy ETF, offered by investment advisor Volatility Shares. The ETF is listed on the CBOE in Chicago, the largest options exchange in the United States, under the code BitX. Now, the ETF won't be investing in Bitcoin directly, but is focused on making gains from price changes in Bitcoin futures contracts. All right, speaking of ETFs, customers of HSBC Hong Kong can now trade, Bitcoin and Ethereum ETFs. According to Decrypt, ETFs are now listed on the bank's so-called Easy Invest mobile app that it has for its retail customers. The app offers exposure to Bitcoin and Ethereum futures based on derivative contracts that trade on commodity exchanges. CSOP Bitcoin Futures ETF, CSOP Ethereum Futures ETF, and Samsung Bitcoin Futures Active ETF are now available on the HSBC Invest app, according to the report. All right, now, since we are on the subject of Hong Kong, one of our favorite places, of course, the Special Administrative Region has been moving swiftly to bring regulatory clarity to crypto. We've told you about that. But now this, a landmark ruling from the city's high court has recognized cryptocurrency as property. And some believe the decision could have wide-ranging effects on the regulation and taxation of the digital assets in the region. Forkast's Jenny Ortiz has this report.
Earlier this year, in an unprecedented move, the Hong Kong High Court acknowledged cryptocurrency as property capable of being held on trust. This landmark outcome on March 31st, resulting from a judicial skirmish surrounding the defunct cryptocurrency exchange Gatecoin, is expected to reshape the landscape of digital asset regulation and taxation in Hong Kong. The ruling was given by Justice Linda Chan, who held the view that cryptocurrency ought to be regarded as property because it can be owned, transferred, and has inherent value. In a statement sent to Forkast, fintech lawyer Christy Swartz of DLA Piper said the ruling confirms crypto assets do not exist in a lawless realm and holders of these assets are protected under Hong Kong law. This is echoed by law firm Petscher's Michael Wong.
When you actually buy a piece of cryptocurrency, you can go to the court and enforce your proprietary rights of that currency against whoever. So I think it's a good sign.
Gatecoin was wound up by court in March 2019, with liquidators appointed after a failed attempt to recuperate disputed funds from a previous payment service provider. Following the closure, Gatecoin's liquidators sought legal advice on how to classify the cryptocurrency held by the exchange. The court had to decide whether it should be treated as property held on trust or be made accessible to a general body of creditors. Jason Chan of Petscher told Forkast several jurisdictions have also earlier decided on a similar issue.
This case really follows, a long line of other common jurisdiction cases. For example, England, Australia, Singapore, Canada, and New Zealand, and even in the US, they all kind of already recognizes the crypto as property.
Meanwhile, Swartz added, the Hong Kong ruling is likely to serve as yet another persuasive authority for courts who have to decide on questions relating to property rights associated with crypto assets.
To be honest, I think Hong Kong, in terms of the approaches, I think they're moving in the right direction. And the more regulations they've published, the better for the industry because it provides certainty. It tells people what you can do, what you can't do.
As Hong Kong moves towards its goal to be a global crypto hub, regulatory clarity on what is a cryptocurrency is precisely what's needed. Jenny Ortiz, Forkast.
All right, great stuff there from Hong Kong, Jenny. Shifting gears to Singapore, last week the Lion City Central Bank gave an in-principle go-ahead to payments network Ripple Labs application for payments license. Rahul Advani, Ripple's policy director for Asia Pacific, joins us right now to break down this landmark development for the company and to dig a little in on the details. Rahul, great to see you.
Thank you for having me, Angie. It's a pleasure to be here.
All right, congratulations on the in-principle approval for a major payment license from the MAS. So tell us, what does this mean for Ripple's operations in Singapore and the Asia Pacific?
It allows us to offer regulated digital payment token products and services, which will enable us to better support and scale the use of on-demand liquidity, or ODL, by our customers in Singapore and across the APAC region, and that are looking to explore blockchain and digital asset technologies for their cross-border payment and treasury use cases. With on-demand liquidity volumes surging in Asia Pacific, we know that there's great appetite from customers in the region to engage and explore with blockchain and digital assets. And this obtaining the in-principle approval of the major payment institution license to better support these progressive customers and scale our ODL services to ultimately build a more inclusive and borderless financial system.
Okay, right. Rahul, so how does Singapore then fit into Ripple's global operations?
Singapore's location makes it a prominent gateway to emerging markets in Southeast Asia, as well as developed markets across the Asia-Pacific region. We're a global business, and we remain hyper-focused on building our teams outside of the US. About 90% of our business is global, and Singapore, and to a large degree the broader APAC region, is one of our fastest growing regions and remains high on our list for recruiting.
You know, at the start of the year, there was speculation that Ripple's case with the US SEC will be settled by mid-year. Well, we're here now. Can you give us an update on how the legal case is unfolding?
We continue to push for a speedy resolution, and we look forward to proving that Ripple did not violate securities law and that the SEC never provided Ripple with fair notice that its actions would ever be prohibited under the law. The decision and timing is ultimately up to the judge. We don't have any control over that.
Okay, lastly, Rahul, I got to ask you about this. Ripple acquired digital assets custody for Metaco for $250 million. It's $250 million US in mid-May. Can you give us an update on how that integration is going and how does it fit into the global strategy for Ripple?
So acquiring Metaco makes Ripple the leading enterprise solution provider in the space. Both Metaco and Ripple share strong, digital asset and crypto DNA. So this is the first of many offerings as we continue to build and invest in crypto infrastructure.
All right, Rahul, thank you so much for joining us on the show. Really appreciate it. All right, everyone, time for a quick break, but we will check in on cryptocurrencies and the NFT markets when we come back. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back to Forkast IQ. I'm Forkast Editor-in-Chief and your host, Angie Lau. It's great to be with you, and thanks for joining us. It has been an interesting week for crypto. We saw Bitcoin hitting levels not seen in over a year, even as ETH, the largest altcoin, gave up about 4% in the last 7 days as institutional interest racks up. So how are market experts playing this out right now? We've got Justine D'Anethan, Head of Business Development at Keyrock, and he's here to talk about just that. Justin, it's great to see you.
Hey Angie, thanks for having me on.
All right, let's kick off with Bitcoin ETFs. The first leverage Bitcoin futures ETF, as we said, just started trading this week. What is it exactly? How are futures ETFs different from spot Bitcoin ETFs?
I have a very negative view when it comes to futures ETFs. I think they're very inefficient instruments because there's a lot of infrastructure and cost required to buy, hold, and roll over futures, whether they're done on a monthly or quarterly basis. And so it almost means that by definition, you're going to underperform the price of the underlying. That doesn't require those costs. But of course, the whole point of an ETF is how accessible it is to institutional investors, professional investors, and also just retail if they have access through an app or a platform or a broker, right? When you talk about spot ETFs, they're a lot more complex because there are security concerns, regulatory and compliance concerns that the regulators, at least in the US and in many actually jurisdictions, can't really wrap their heads around, and that's why it's so hard to get a spot Bitcoin ETF.
Yeah, it's interesting to see how institutional players remain pretty optimistic about Bitcoin ETFs, as we've seen with BlackRock and Invesco and WisdomTree, and of course now Fidelity, even as retail investors are still slightly wary. What are these institutions seeing that maybe the average retail investor isn't yet?
I don't necessarily think it's a difference between a perspective on the asset class or the space itself, between retail and institutional investors. I think they just go about the space in a very different way. When you're an institution, you're going after an infrastructure or a product that caters to that market and to investors.
All right, Justin, let's shift away from ETFs. Let's take a look at the markets right now. I really want to talk to you about this. Bitcoin sitting around the $30,000 mark, even though a lot of people predicted that it would be between 25 to 30K for a little while longer. So what's your take?
Sure, so Bitcoin has performed very well in the past 7 days on the back of all the positive news we've had. We might keep on going up if people are still enthusiastic about it and if the macro environment itself remains positive, but things change very quickly in crypto in general, right? So I think it's too soon to say fundamentals are all rosy and positive and we should all be buying Bitcoin. But right now, at least, the fundamentals are definitely very positive, and so there's no reason why Bitcoin couldn't stay or even go higher than 30K.
Justin, always a pleasure speaking to you. Really appreciate it. Thanks for joining us. All right, over to the world of non-fungible tokens, NFTs, as you know them by. Bitcoin Ordinals protocol has emerged as quite the fierce competitor to Ethereum NFTs in June. 4 out of the top 5 NFT collectible sales in the last 30 days were on the Bitcoin chain. And as you know, we track BTC Ordinals on cryptoslam.io. Let's get in our very own Yehudah Petscher to break down that nitty-gritty of the NFT market. Yehudah?
Sentiment across the NFT ecosystem continues to be positive as traders' optimism is stoked by bullish crypto news. A majority of NFT trading happens over on Ethereum, where the price of Ether is threatened across the 2K mark. So why am I mentioning crypto? Well, NFTs and crypto are closely tied, but you won't typically see them running together. When crypto is running up or down, NFTs typically stagnate, and that's because the price of crypto affects the price of NFTs pretty significantly. On the flip side, buying an NFT whose price could drop the moment you buy it, well, that's not ideal either, so buyers are also sitting out. Established Ethereum projects, collections like Moonbirds, Clone X, and Doodles have fallen to all-time low points, but even still, NF traders are feeling optimistic. That's largely because of the art scene and because of some exciting announcements in some of NFT's biggest projects. Azuki's Follow the Rabbit event in Las Vegas last Friday saw the project's founder Zagabond deliver another check your wallet moment. And this year's announcement delivered them NFTs from another new collection called Elementals. The impact of the announcement saw a decrease in Azuki's floor price, but the following days saw Azuki's average sale price increase to one of its highest points since March, when it reached $46,000. The new Elemental collection will likely have an impact on the Forkast 500 NFT index because collectors may want to liquidate existing assets they hold across other collections to get a stake in this new Azuki collection. Plenty of others are having a very rough stretch. That's including the Bored Ape Yacht Club, who continues to see falling prices as the narrative across the NFT community focuses on the collection's falling floor prices. It reached as low as 33 ETH. Large Bored Ape holders like Machi Big Brother and Franklin together have sold over 60 Bored Apes. Other whales are taking their mid-tier apes and they're listing them at the floor, and that's leading to savvy traders scooping them up and quickly flipping them for profits. The discounted price has also led to a new anonymous wallet going on a shopping spree. Some exciting news has taken place over in the gaming world. Gods Unchained arrived on the Epic Game Store last week, bringing the NFT-based card game to a huge new audience. Though to say it's a new game isn't entirely accurate, Gods Unchained is actually one of the blockchain's oldest video games, being born on Ethereum in 2018 before migrating to its current home on Immutable X. That's for scaling purposes, and it seems like a very wise move at this point. Mythos Chain's NFL Rivals also made new this week as the free-to-play, officially licensed NFL mobile game crossed the 1 million download mark. Just as noteworthy is players are averaging 2-hour-long play sessions. These are all remarkable achievements considering it's the NFL offseason, so we'll see how this ecosystem grows once the upcoming season kicks off in September. And a history lesson to close things out. So Yuga Labs is publishing a book on the historic CryptoPunks collection, and this book will detail the collection's history as being one of the primary inspirations for almost everything you see in the NFT space today. The book will feature insight from some of the collection's most noteworthy collectors, including Beeple, Def Beef, and Snowfro, although there is backlash among the punks community from members who have been staples in the community and have helped grow the community for years now, who have so far been left out. That's a wrap on the NFT markets. I'll see you again next week with another market update.
Always interesting in the world of NFTs. Yehudah, appreciate that very much. Thank you for joining. All right, on that note, let's take a quick break right now. We're going to focus on how crypto is faring in the world's most populous country. We are talking about India. Don't go anywhere.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back to Forkast IQ. We're going to talk about crypto in India right now. It's been a rough spot for the better part of the past year. We've got regulatory changes, taxation, and market movements, and it's all impacted the crypto landscape in the South Asian country. Forkast's Pradipta Mukherjee takes a closer look at where the industry stands today.
It's 100% speculative activity, and I would still hold the view that it should be prohibited.
The message from India's central bank is clear. Crypto is not welcome in the country. India's crypto story can be traced back to 2014, when the nation's first crypto exchange, Unocoin, was set up. As digital assets rose in popularity, Indian entrepreneurs spotted a new opportunity. And over the next few years, local cryptocurrency exchanges, CoinSwitch, CoinDCX, and WazirX were set up. Matic Network, which later went on to become the Polygon blockchain, was created in Mumbai in 2017.
The building scene is still quite vibrant in India. Of course, there are certain, startups which have left, in the sense that they have now set up in some other jurisdictions. But still, majority of them still work and stay in India.
In 2021, India introduced the cryptocurrency bill. 2 years on, the bill has yet to become law. Anand Purushottam of Crypto Legal told Forkast, it is likely that we will see a new version of the bill this year, and the outcome will depend on India's discussion with the G20.
And a lot depends on the kind of deliberations that G20 member states are actually going through. So once we have some clarity on what members under G20 think about it, they are also likely to release a report soon, probably in 2-3 months. And that report of G20 is likely to, in my opinion, shape the kind of crypto bill that we'll see in India.
While digital assets were not officially banned, regulators were clamping down through enforcement. In the 2022 budget, India introduced a 30% flat tax on all crypto income and a 1% tax deducted at source, or TDS. This had an immediate impact. Crypto exchanges saw trading volumes drop as much as 90% from July last year, and over $3.5 billion of crypto trading moved to offshore crypto exchanges, according to one estimate. Earlier this year, India also expanded the scope of Prevention of Money Laundering Act, or PMLA, to include digital assets, which requires crypto exchanges to conduct due diligence and report suspicious transactions. India's Financial Crime Fighting Agency, the Enforcement Directorate, has been investigating at least 10 crypto exchanges for alleged money laundering and has seized over $115 million so far.
This taxation is kind of a regulatory tool that the government wanted to use to maintain a status quo. And this status quo becomes very important because, say if we look at the timelines, then tax was imposed last year in March, and that was the time when, though even now we don't have cryptocurrency specific law.
While India has been bearing down heavy on crypto, it sees value in the underlying blockchain technology. Speaking to Forkast, Raj Kapoor, founder of India Blockchain Alliance, said various industries are adopting the technology.
What we do promote is the adoption of the technology, that's blockchain, and the distributed ledger technologies, and everything which flows with it, that is the metaverse, the NFTs, the DeFis, and the Web3s, all that is coming inside now.
The South Asian powerhouse has also been working on developing its own CBDC called the e-rupee, which the central bank sees as a game changer.
CBDC is the future money. Large number of countries are working on CBDCs. Technology is becoming more and more robust in this area. We cannot be left behind.
Countries' leading banks, including HDFC Bank, ICICI Bank, and Kotak Mahindra Bank, participated in a CBDC pilot launched late last year. The e-rupee trial tested both wholesale and retail payments. And just a few weeks ago, 6 Indian banks and JP Morgan launched a pilot to try real-time dollar settlements using JP Morgan's Onyx blockchain. India is also using its presidency of G20 to push for greater collective oversight on crypto assets and markets. Moreover, digital payments have taken the country by storm. Even street vendors proudly display QR codes for payments.
I don't think it's really a question of survival in the sense that, at least personally, I don't think the taxation regime that is applicable today will continue. And it's kind of a transitory provision where once the regulatory part is clear, then there will be a rationalization and, probably we'll see at least some form of tax benefits given to the ecosystem.
The future of the whole entire asset class is going to be tokenized. Today we have tokenized real estate, we have tokenized bonds, we have tokenized, we can tokenize green carbon credits, we can tokenize anything which is an asset. The next 5 to 10 years will see a major paradigm shift from the way things are today to getting tokenized.
Could crypto then be the next step in the country's fintech journey? Will we see clearer regulations and a well-defined crypto ecosystem develop in India? Or will crypto firms be pushed further into the shadows? Well, we will surely keep a watch. In Kolkata, India, I am Pradipta Mukherjee.
Well, that's a wrap on this week's show. It's always great to be with you. Remember to like and subscribe to this video if you're watching us online. It helps us get to you and get all of those insights to you better. Or stay tuned right here on this channel if you're watching from home, the office, or really wherever you are. We really appreciate the time that you've spent with us. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ. Get intelligent in Web3.